Hello and welcome to the Stock Planner channel. We're an education channel, sharing our ideas and doing our own due diligence. Each of us is responsible for our trades, and I'm looking for 1 or 2 long trades, but I'm actually saving my money because I'm a little worried about the situation in Ukraine that might devastate the stock market. But I can't live my life like that, so I have money saved out, but I can afford to spend $1 or $2 on a small trade. Looks like it's green today. All 3 indices are in the green. Technology is doing better today. Looking at ORCL on the daily time frame, we see it's been beaten down for the last 2 months. How far is it going to go down? I don't know. The MACD just said, hey, it's going to go down even further. And the stochastic RSI is pointing down, but the RSI says maybe it'll come around soon. And maybe this stochastic RSI will come around soon. I'm seeing things that are not there. Where this is going to stop, nobody knows. But yet, technology is in the green today. Earnings is way off. So in my heart, I see an imaginary reversal. I'm seeing that it might go up. So let's do some analysis here to see if I can convince myself that that's true. Using FinViz and drilling down a little further, we see this upper channel and a breakout to the downside. This candle here today is an indecision candle. I think they call it that. Software, infrastructure, networking, 5G, Internet of Things, Oracle. Target price of a 102, trading at 83. I like that for a buy. And this is a profitable company. It always has been. You can short it if you want, and it doesn't have a buy rating or sell rating. It's just right in there, moderate. Like it's probably a hold. A downgrade in December. It's one of the best 13 cloud stocks to buy. Motley Fool. I think Jim Cramer likes it. Tip Ranks has Oracle as a moderate buy. Covered by 20 analysts. That's a lot. 8 out of 10 ranking. That's great. Hedge fund decreasing. We don't like to see that for a buy. Technicals are positive. And I think they are. The fundamentals, particularly asset growth, is not so good. We're going to look at that a little deeper. People like it. It's traded a lot. I think long term, this is stock of the future. I'm looking to make a short term trade. I use a tool called Simply Wall Street, and it says it's trading at 18 or 19% below its estimated fair value. Earnings are forecast to grow by 16% and pays a dividend, and that's not too bad. And here's some risks. None of those really concern me. The competitors are Microsoft, and this is snowflake. You want the snowflake to be green. This snowflake is orange, almost red. One of the things I like about Simply Wall Street is its graphics. Here's the current price. Here's where it should be trading. I think we've seen that Tip Ranks was at 105, and there is your future growth. Well, it's not pointing upward, but it's not so bad. Nobody's selling, and some people have bought in the last year or so, insider. That's good to know. Well, this company is still growing, and it's undervalued. Warren Buffett would like that. He likes to buy undervalued stocks. So, let's see if I can find something for the short term that the stock price will stay above where it's at now, and I can close it out before earnings, because I think that this is where it's going to end up soon, according to my guess. Your guess might be different. So, without going in too much depth, I'm using a simulator tool called Option Strat. It's free. It allows you to go ahead and do various different option strategies. One of them is a put broken wing, and it's a long strategy, and it requires you to sell 2 puts and then buy 2 puts on either side, and then you have the range in between. The nice thing about this is there's no upside risk. Here's the current price. The current price is around $84, and this is $83.94. The only risk that we have is the downside. You get a net credit of $100, and you can have a max loss if you let it go that far to $239. You never let it go back that far. So as long as it stays above 184, we have a winner on our hands, and we can get to keep this credit. But also nice is if you can catch it in between here, your profit increases. Let's look at the table. Likewise, if you close these trades out earlier, this is what you expect to get. It has to stay above that 84. And if it goes below the 84, you start losing. And you could have a stop loss of about 3%. This is what you would lose. You have to take that stop loss. 3 or 4%, 5% is what I usually use for these kind of trades. So what do you think of this trade? No downside risk. Catch it in between here. You have a great potential for a profit. Max loss is that. Now, I did have to use, even with my broker, which is kind of, they're flexible, I still had to put $2,500 down on this trade and on hold, margin hold. So it's a large amount of margin to hold up, but I'm only going to hold this trade for a couple days. Only going to hold this trade for a couple days, trying to make around $50. So that's the trade using a put broken wing strategy, which is a long strategy. I put this little break-even chart on the break-even point, and it closes out on February 18th. I'm using a free tool called TradingView as my charting package, and I'm using these indicators, the MACD, the stochastic RSI, and the RSI, and I have my settings in the description below. Please comment on this trade or any other thing. Do your own due diligence. Like what you're doing. Happy trading. Catch you on the flip.